Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 6th of September. And disappointment in the air for the FTSE 100 with the bull trap through the 50-day line. You can sort of see a pattern developing since April. Any forays above the 50-day line have been sell points, especially by about 100, 200 points, that kind of thing. In this case, we only just managed to get through it, and we're back below the old July support there at 7,400. End of day close below 7,400. We're risking yet another test of these low 72 area, 72.20, 72.30, that kind of thing. Might just be some support there at 73.30 to stall the pullback, but at the moment disappointing, as I said. On to the DAX. Here we had the market struggling. It also actually failed at the 50-day line at the end of last month, and now we've got sort of in the brace position to see whether that uptrend line from December around 15,600 will hold. Otherwise, it is a move to the 200-day moving average at 15,400. But hopefully that is the worst that we will see, even though the RSI push through 50 was aborted, and that actually is quite a negative signal. Moving along to the Dow, which perhaps was the instigator of this latest mini bear phase. Here we're back below the 50-day moving average, 34,700, looking for support at the uptrend line from last October, 34,300. And the worst case at the moment is that we'd have to head down to the 200-day moving average, 33,800, before support came in. Sort of double RSI failure just above the neutral 50 level, which is not a good look, but I suppose it does. All of this does tie in with the normally bad September-October time for indices. On to Bitcoin, which hasn't had a good time for quite a long time now. Here we're looking at a situation where we're just holding an uptrend line there from January, 25,600 or 500, let's say, and below that, we've got the risk of a move to the floor of that broadening triangle, the red one there, from March, as low as 23,300. And the way things are looking at the moment, with the up-and-coming cross between the 50 and 200-day lines, one would expect now this market to roll over to that 23,300 area. This stage only well above 26,500 on an end-of-day close basis, really delaying a rollover for this market. On to the stocks, and not too many today. I suppose it reflects the sort of the situation with the indices. Here we've got, to start off, we've got Allergy Therapeutics, and maybe that angle there on the upside a little bit steep there, but rising trend channel base there, potentially a rising trend channel base there since June, and the reason for the inclusion really again is that we've had a sideways shuffle for this market above a rising 50-day moving average. That's around 2.3 pence, above 2.3, looking for this stock to flip up to 3 3/4 at least, which was August resistance. Best case is up to 5 1/4 by the end of next month, but we have to hold that 50-day line at 2.3 pence. On to 88 Energy, which was given some coverage here a day or two ago, breaking that falling wedge from back at the end of last year. That was around the 0.32 level, and above that we're looking for at least a move back up to the low 40s, 0.42, the June resistance. Best case over the near term, maybe by the end of this month, would be up to 0.5 at the 200-day line. If you found the shares looking for greater glories, maybe by the end of the year, something like that, 0.68, 0.7 at the top of that broadening triangle from back in March. Great Southern Copper is next, and a real favourite, this one. The reason for that is the gap close buy signal we had at the beginning of last month. The rally started with an unfull gap to the upside, and that tends to be the source of the greatest rallies, as we'll see later in this video. Another unfull gap to the upside at the end of last month, and the view now is at above 3 pence, which was the August resistance. We're looking for as high as 4.8 pence by the end of next month, maybe a bit sooner than that, but let's go for the end of next month to take the shares back to where they were back in May last year. Moving on to Genedrive, and this current situation looking quite exciting in the sense that we've got one of our better setups with the bear trap gap reversal, so the shares gapped up today, bullish divergence ahead of the gap higher, and the only thing missing, I suppose, is an end of the day close back above the 50-day moving average at 13.6 pence. We haven't been above the 50-day line properly since the beginning of April. So that would be something cool. The top of the triangle there from July at 16.5 pence. That's the initial target. And then maybe up to 18 3/4 at the 200-day line after that. But the upside in focus while we're above recent neckline resistance at 12.4 pence. Moving on to a stock which has been a real winner on both the fundamentals and the technicals of late, Kin & Carter. Here we've broken through the post-May resistance around 84 pence. Above that, we're looking for the top of that rising trend channel from the beginning of April at £1.11 as soon as the end of next month, perhaps even sooner. And the reason for the delight with the setup is that not only did we start the rally with an unfilled gap to the upside, it's a bear trap island reversal because we gapped down back at the beginning of May. That tends to be a very strong setup indeed. And I suppose we could also add in the bullish divergence as well. So that means the stock has got everything we like about a potential recovery situation. Speaking of potential recovery situations, we've got light science, and here we had the massive gap down, and the shares are now turning around for the post-summer period. I suppose the rally started on the 3rd of August with that break of neckline resistance there from back in April, around 1 3/4 pence. Rising trend channel now from June, looking for the top of that channel, 3.8 pence, which is also the top of that gap down from April. Hopefully 3.8 by the end of next month, and maybe even by the end of this month, while we're above around the 2 1/4 pence area, the initial September support area. Moving along to one of the triumphs of the recent past, which is Plexus. We had the message before that above 10p we're looking at 14, and in fact the shares have managed to blow that out of the water, which is always nice. We've got hopefully what is well, I don't really want it to be a final target, but here we've got a fresh target there from May, the May 2021 line there, up to 20 pence, hopefully over the course of September, while we remain above 14. So above 14, looking for 20 now on Plexus, and what a series of fantastic moves the shares have had. Rally started with the unfilled gap to the upside, and that was on the 22nd of August. The shares have never looked back since that particular move. We also had a sideways shuffle above a rising 50-day line. Hence, why we have Allergy Therapeutics in today's selection. Moving along to a less dynamic situation at the moment, but we've got RBG Holdings, and here we've broken a line of resistance there from back in July. The line there at around 23 pence, and above that we're looking for the top of a rising trend channel from back in June, as high as 38 pence by the end of next month. What would be nice would be an end of day close back above the top of that gap, a gap close buy signal at 25 1/4 pence plus. But it looks as though the shares have already done enough, especially with the RSI push through neutral 50 and breaking that 50-day line around 23 3/4. Moving on to a stock which is also in potential recovery mode, Sareum. Here we had a gap to the upside to start this month, fill the gap and then up, which is quite a nice signal, so gap fill rebound. Top of the range here is £1.30, and we're looking for that while we remain above, or if we can get an end of day close basically back above the old support there from March at 83 pence. Above 83, looking for as high as £1.30 by way of 100 pence and the 200-day moving average. On to Tertiary Minerals, which I interviewed a couple of weeks back, and maybe the penny is dropping in terms of the potential there, but we've got a falling wedge set up here with the bullish divergence from back in July. Well, that's a tick. Just want to see an end of day close through the 0.1 pence level to take us up to an initial target of 0.13 and the 200-day moving average. But while we're above the old July support, 0.09, looking at a potential recovery there. On to the last three, starting off with TM1, otherwise known as Technology Minerals. Here, just the first glimmer of a bear. Well, we've already had the bear trap rebound from below 1.3 pence, a V-shaped bull flag potentially taking the shares up to 2 pence while we remain above 1.4 pence. The next stock doesn't get much airtime either here or anywhere else, but looking good at the moment for Vector Capital. Unfilled gap to the upside, and we do obviously really like those. They tend to work very well, especially at the bottom of the range. And the view now is that above the 50-day moving average, which is now rising, another positive signal, looking for 42 pence by the end of this month, or perhaps even sooner. Finishing off with Zenova, which seems to have teamed up with the Dulux dog. Here we had unfilled gap to the upside through the 50-day line, bullish divergence, and that was all in July. Sideways shuffle above a rising 50-day moving average, and we've had the small pop today to the upside. The view now is that while we're above the 50-day line at 4.7 pence, looking for 9 pence as soon as the end of next month. That's it from me today. More updates tomorrow.